Hey everyone, Andy Moss here, trader, CMT, author at trading-adventures.com, and we're back for another look at the weekly charts before we skip over to the bigger time frame. This is the roadmap of the stock index futures and how we spent the last 5 or 6 days. It's been chopping around on either side of a slightly rising to flattening to slightly declining and then rising again. 5-day moving average on the S&P futures, much the same for the NASDAQ, and Russell and Dow futures are below the slightly declining 5-day moving average. So a little bit of a mixed market there for the week, and some progress into Friday afternoon there. So let's go ahead and skip over to our weekly charts. Let's get these pulled up here. And here's the notable thing about the SPY, S&P 500 ETF. It has broken through this trend line that has held place for the last 6 weeks. So it's not a new high quite yet on the weekly close, but it's making some progress higher there. It's back above the short-term moving averages. By the way, as we go through the charts, you can pause the video and look up here. This is a 4-week, a 10-week, and a 40-week. The 4-week is about a 20-day, the 10-week is about a 50-day, and the 40-week is roughly equivalent to a 200-day moving average. So those are the moving averages we have on the chart. We've got the RSI up here, and the volume, the shaded blue area, is the 20-period rolling average of the volume. So we're still in a light volume situation, which is commensurate with summer. Not surprising there. And RSI still holding firmly in the bullish upper half of the range, not overbought, not extended. Things are looking better here for SPY. Q, or the Qs, I should say. The NASDAQ 100 ETF. Similar rebound for the week and closed back above the still rising 4 and 10-week moving averages, but a good bit of ways from a new closing high. But it's healthy consolidation. It's a little loose and wide in here, but so far still holding the uptrend on the longer time frame here, even though we've spent the last 8 or so weeks in a mostly sideways range. We're right in the middle of that now, and we want to see some follow through on this hammer. It's kind of a hammer shape. It comes after a bit of a decline, but it's not very pronounced. But regardless, it's a strong rebound on the week and closing above the moving averages, and we want to see continuation higher there on the Qs. We'll dig into some specific areas of those indices here in a little bit. As longtime viewers know, we'll get a little more specific towards the end of the video. Dow, even though it's below a 5-day moving average, it's still riding this trend very steadily here. Nice continuous move higher out of this consolidation back in mid to late April and early to mid-May. And RSI just a touch above 70 here, but very much in the bullish area, and the volume is a little low relative to the average, as we've seen in the other indices. IWM, again, nice rebound here in the week. A little bit of consolidation here over the last 3 weeks, a little below the shortest term 4-week moving average there. But these are still rising in sequence and a very strong trend there, even though we've had a bit of a chop and a little uncertainty, I should mention as well. The last few weeks and the midweek updates have produced a little chop and some reason for a pause or slowdown on the bullish readings, but that's why we look at multiple time frames. And when we zoom out, eliminate some of the noise, and look at these weekly charts, we can see that the trends are still very much intact. Bitcoin has not been in an uptrend for quite some time. Had a little bit of a blip here, found resistance at the anchored VWAP from the highs, and it's trying to rebound again. It had a nice bounce here last week, and coming into this week got a little follow through, but it's a little compressed there. But at least it's back above a 4-week moving average that's trying to flatten out a little bit, and it did help mostly hold this 60,000 area. The dollar trying to keep building progress higher. It's above the moving averages. It's above this consolidation range, which dates back a long ways, and not running away, which is just fine, but holding up. And that's about as good as we could expect from the dollar, at least on its potential effects on the stock market. Volatility is asleep. It's taking the summer off. Below 17, nothing to be alarmed about here right now on the VIX, unless you are in the camp that contraction leads to expansion, which is always true, but the question remains, when does that expansion come? For now, it's making lower closes and declining. The all cap world index X, so this is what I like to call the rest of the world, is also holding up just fine. It's a little choppier, a little flatter. The 4-week is declining and nearly meeting the rising 10-week here, so maybe it's got a little more work to do, but we can see stocks across the board rebounded off their lows nicely. And the bullish option here, or the bullish preference, would be to see continuation higher and maybe even go up and take out these highs and make a new closing high this coming week. We'll see if that happens or not. One thing that may help with that is China. Last week we looked at this, and this was a very bearish look on the chart, a very tight range in the bottom of this range, which was these two large red candles, and we got a bounce. So what we want to watch for here is this a reactionary oversold bounce as the RSI got down below 30? Does it have any follow through? Can this develop into an attempted change in trend, or was this a reaction that people finally said China's too cheap, I got to buy some here, and now they'll be on the fence about whether to add to those positions and follow through with the buying? So that's going to be one to keep an eye on this week, not necessarily to get involved, but to see how it behaves and what implications that may have for the rest of the foreign markets. Bonds continue to go nowhere. This little bounce has been sold off. We're back down here to not quite a new recent low, but pretty close. And so not great action there in bonds. If we want to see interest rates falling, that means we need to see bond prices rising, and that is not what's happening on this chart. This is the AGG, the aggregate bond index, the TLT, the 20-year Treasury index. Similar action as it gets sold off here, not as close to this recent low. But again, the story is the same for the effect that those prices have on interest rates, and they are not going in the right direction by most people's preferences. High yield bonds still choppy and consolidating here. Commodities, a little bit of a bounce. We know GSG is largely driven by oil, and oil just trying to put the brakes on. This is the whole broad expansion higher on the Iran news has now been sold. It's filled this gap, and oil's back where we used to see, or we're used to seeing it pre-March. So we'll see how oil develops. It's still below steeply declining moving averages. The close was right here at the declining 4-week moving average, so that's going to be a level to watch. It did get a bit higher midweek or during the course of the week, but did not close there. So that's what we'll be watching for oil. Can it hold up here and continue to try to build a base? Notice that the RSI is not oversold. It's just here below 50%, and so this would have to fall a good bit more to get an oversold reading on RSI more than likely. Gold and silver continue to drift lower. A little bit of buying action here last week, tried to stop the decline, but it's not getting any real follow through. This week's closed a little bit below last week's close. Similar action for silver, still below the declining moving averages. Nothing bullish on the last couple of months there for the precious metals. Quickly, the equal weight S&P holding up very well, climbing the moving averages, showing that the smaller companies are participating in the upward move, and perhaps even more smoothly and consistently than the leaders. And again, we'll dig into some of those in a few minutes. And here's the equal weight NASDAQ 100. Once again, a little loose and wide here for a couple of weeks, but back to new highs. It's not as choppy as the capitalization weighted NASDAQ 100, which of course is the QQQ. And so looking at our relative strength comparisons, growth versus value, getting a bit of a bounce here in favor of growth, and that is holding this previous support level pretty well. So the 4-week is flattened out. We'll see if this continues. I have reason to believe that it might. Consumer staples versus consumer discretionaries, still going nowhere. You'll see the moving averages coming together. The rising 4-week, the declining 10-week is in this choppy range. No resolution there. So that also means, even though it's in a slightly downward sloping trend, nothing incredibly broken or alarming there. And what that would be, if it was alarming, would be similar to this, when we see overwhelming strength in favor of the staples, which traditionally are considered a more defensive area of the market. High beta versus low volatility, getting a bit of a bounce here. A hammer candle back in the area, or back in favor, I should say, of the higher risk areas of the market, but still below the moving averages and still has work to do. This is something to watch for if you like these relative strength charts or relationships. What we want to see as a potential bullish indicator for the overall market is continued favoritism towards the more risky high beta sectors of the market and away from the lower volatility, more defensive sectors of the market. That would add strength to the bull case. And now we'll get towards some of the individual sectors and some of the stocks that have been, or groups that have been leading things in either direction. The semiconductors, we've covered this extensively or reviewed it extensively. A monstrous move here from the March 30 low, and now it's consolidating a bit. It's gotten a little wide. It's between the moving averages, but certainly nothing terribly alarming here on the weekly time frame, as this is a rest after what has been a monumental move higher. XBI has been a leader, and this is a reason why we don't assign price targets higher. This is not a place to say that this is, let me back up and say we covered this bull flag pattern and documented or notated the measured move price objective. That's a technical tool we can utilize, but that doesn't mean once it hits that, just get out. If that's a reference point, set an alarm, set an alert, say, okay, how does price look at this level? And clearly, there was no indication of slowdown or concern when price got to that measured move price objective. It kept on going. Now we have a long upper shadow, the first red candle in the last 5 weeks, and RSI is a bit overdone. And notice also here, let's draw this in, a little bit of a negative divergence in the RSI. Another tool to look under the surface and say, okay, price is clearly making new highs. RSI can't confirm. So that is another piece of the puzzle to say maybe it's time for a little bit of a rest. It's not predicting, it's not saying get out at all cost. Just if you have nice profits in the biotech sector, you want to be, as usual, raising your stops, maybe trimming some of your position and reducing your risk along the way up so that you don't sit tight for a total move that would, if that happened, erase a lot of these gains. So a piece of the puzzle. Software, trying, but still stuck between the moving averages and below the 40-week moving average. So it tried to make a move higher. It couldn't sustain that. It closed the week right where it opened. Still a lot of indecision in the software sector as a whole. There were some encouraging moves in individual names within that sector, but one of the biggest that we'll look at in a minute, of course, that's Microsoft. Not as encouraging as some of the other issues within that group. So we'll get to that in a minute. Mag 7, on the other hand, look at this. Back above all the moving averages after finding a bounce here at the VWAP anchored to this candle back on April the 7th. It's back above the moving averages and heading north, as it was, or at least it was at the close of last week. Again, can we see some follow through? Does it get a week 3 and go back up into this area? Does it find some trouble in this 68 to 69 level? Does it go on and test or even break the recent highs? Can RSI continue higher? That's something to be on the lookout for with the Mag 7 as a group. And financials, another bull flag that we'd covered, and it achieved that measured move price objective and then some this week. It touched this recent high back in January and pulled off a bit. So again, it's not broken. It doesn't say run for the hills. It means that it's taken a bit of a rest like it did this week and this week. And that's within the context of a really strong move here since June the 1st. So be on alert there for the financial sector if you're involved in that as a group or individually. Say, hey, this might take a little bit of a break. Do I have an opportunity? Is there a sensible position to trim, a sensible spot to trim some of the position or to raise stops up underneath? Energy, much like oil, not making a lot of progress. It's a nice candle here for the week, and it was upward progress, but it's still got work to do here at this 55 area, which is the VWAP anchored from this compression, this consolidation candle here just before the big breakout. So XLE is another one to watch. And now let's go through some of the Mag 7 individually, or all the Mag 7 actually, are they trying to shift back from the Lag 7 to the Mag 7? That's a moniker that's been given to them as they struggled and lagged the overall market. Now we've got Apple at new highs. So that happened fast. It looked really ugly, and now it bounced, and it looks pretty strong there. So Apple is holding up well. Amazon, a bit of a bounce between the moving averages, still has a lot of work to do. Google, similar situation here. It tried to continue this bounce, sold off a little bit once it touched the declining 10-week moving average. So it's still got work to do, although it is above this anchored VWAP, the orange line, and slightly above the declining 10-week moving average, or excuse me, this is the 10-week, and this is the 4-week here. So they're flip-flopped there at the moment, and we need to see the price get on above this and get this red line back above the blue line to confirm that resumption of uptrend. Meta had a really big week after getting somewhat of a false start last week. The follow through was good, and it closed above this trend line, similar to what we saw in the SPY with the index as a whole there. Although this one spread over a much longer time frame, this is this is new ground for Meta as of the close last week, as it gets above this line and tries to initiate a breakout situation here. Can we get a week 3? Can it get above this previous high? Can it get some follow through and continue up in this range? If it doesn't run away higher, can it at least build a consolidation that stays above this trend line as the moving averages catch up some? Those are a couple scenarios to watch for with Meta. Microsoft still looks pretty ugly. This is not a wildly encouraging candle, but it's worth noticing that a lot of these charts looked pretty ugly last week or the week before, and they've gotten significant bounces from either oversold levels or just what someone clearly has perceived as a value opportunity. We have been seeing higher volume in Microsoft, not only in the individual weeks, but notice the rising average here. So people are paying more attention, whether good or bad remains to be determined. So far, it's got a lot more work to do to the good side, but that's the situation on Microsoft. NVIDIA is, again, this looked like a pretty ugly situation last week with a very tight range in the lower reaches of this sell-off, but it was holding the rising 40-week moving average, and it looks like that was enough to get it a boost back up here above the moving averages. Testing this, I don't know why that anchor is on there. That was probably more relevant on a daily chart. We'll just take that off for now. The more important thing is that this was a previous high. This was the high of this candle, which was a previous high back here in October of last year, and it acted as resistance for 3 successive weeks there not long ago. So does this level matter in the coming week? That's around 212, 213. We want to see NVIDIA, if we're bullish, we want to see it get above and stay above this 212 to 213 area. And then finally, we'll take a look at Tesla before we take another glance at breadth and participation. Tesla is still stuck. Last week it tried to run, but it couldn't close the week there. This week it's sandwiched between the 4-week, the 10-week. It touched the 40-week. We've got VWAPs from highs and lows. A lot of congestion and messiness, choppiness here for Tesla. No directional resolution yet on that name. So now let's look quickly at the percentage of S&P 500 stocks above a 50 and 200-day moving average, and no alarm bells here. A little bit of a slowdown in the rate of incline or the rate of increase, but it's in a healthy territory and really nothing to be concerned about. So what does it all mean? We made some progress this week. I think the chart of the week would probably be SPY getting above this trend line. That is action we haven't seen in several weeks now. It's not monumental. It's not running away, but it's development in the bullish favor, in favor of the bullish camp here. So it's above this trend line. It's above the moving averages. The RSI is fine. And that is something that would say probably we need to be on alert for more potential upside here. Anything can happen. We'll take a look at the futures when they open here at about 6 p.m. this evening and see if they give some early clues, but that could and will change before tomorrow morning, more than likely. But overall, I think this is a positive development there. Can we get the cues to follow suit? Can the strength in the Mag 7, Microsoft notwithstanding, Tesla still stuck, but some of the other names, Apple, new highs, Nvidia, nice bounce, Meta breaking a trend line, all of those kinds of things are nice positive developments. On the calendar for next week, we have some Fed speakers, we have some auction bills, we're going to get some inflation data, CPI on Tuesday at 8:30 a.m. That will be heavily watched. We've got more Fed speakers, we've got PPI on Wednesday. So there are some potentially market moving economic events or announcements coming next week. We've got jobless claims, so on and so forth. You can find all this on the calendar on TradingView if that's what you use. The information is not hard to locate. And again, not earth shattering, but things you want to be aware of. Some of these things can and often do have impact on the price action for the day and even a few days afterwards. So pay attention to that. And in the meantime, look at your multiple time frame charts. We want to look at the big picture to eliminate some of the noise. We want to drill down to get a better idea of what's going on in the closer time frames. We keep a good eye on the roadmap chart, which is a 1 hour chart. For me, it's a 1 hour chart of the stock index futures. Maybe you want to look at the ETFs, and you can use this tool to show you quickly, very easy visual reference. Are we above or below a 5-day moving average? Is that 5-day moving average rising or falling? All of those kinds of things. So as I go through the list here and come up with some focus items for Alphatrends, those are the kinds of things I'll be looking at. You can drill even further down to a 10-minute, a 5-minute, a 3-minute chart, whatever your preference is, to really try to get precise on your entries. And all the tools are there. We have to pay attention and listen to the message of the market. So as always, we'll continue to do that. I hope this helps you interpret that message, and we'll see what happens at 6 p.m. and then later on tomorrow morning. Have a great rest of your day.